Asia stocks stay gradual. Dollar resumes retreat. Sydney Asian shares had been gradual on Monday as disappointing Chinese financial facts fed doubts Wall Street's rally will be sustained, even as the dollar endured its retreat at the yen as speculators have been forced out of unexpectedly unprofitable quick positions. China's respectable degree of factory activity reduced in size in July as sparkling virus flare-ups weighed on call for, and the Caixin PMI additionally neglected forecasts. South Korean interest weakened for the first time in years, while Japan elevated on the slowest tempo in 10 months. That did now not bode properly for the raft of other PMIs due this week, together with the influential U.S. ISM survey, at the same time as the July payrolls report on Friday need to also display a further slowdown. At the same time, U.S. facts out Friday showed stubbornly high inflation and wages growth, at the same time as valuable banks within the UK, Australia and India are all expected to hike once more this week. We anticipate the Bank of England to step up monetary tightening with a 50 BP hike at its August assembly. The growth in electricity costs is possibly to be the primary motive force, warned analysts at Barclays, Lon, BARC. Central banks focus at the nevertheless strong inflation momentum and tight labor markets instead of alerts of slowing growth. This could disenchanted markets' latest awful news is right information view. The warning become evident as MSCI's broadest index of Asia-Pacific shares out of doors Japan eased 0.2%. Chinese blue chips had been flat, at the same time as Japan's Nikkei eked out a benefit of 0.4% and South Korea 0.3%. S&P 500 futures and Nasdaq futures both eased 0.3%. EUROSTOXX 50 futures brought 0.1%, at the same time as FTSE futures fell by means of the same quantity. While U.S. company profits have by and large overwhelmed decreased forecasts, analysts at BofA suggested that only 60% of the client discretionary region had reported, and it became below the most strain given inflation concerns for consumers. Our bull market signposts additionally suggest it is untimely to name a backside. Ancient market bottoms have been accompanied via over 80% of those indicators being brought on versus simply 30% presently, BofA stated in a note. Moreover, indoor markets always ended after the Federal Reserve reduce, which probably is at the least 6 months away. BofA house view is for a primary reduce in 3Q23. NOTSO, dovish pivot bond markets have additionally been rallying tough, with U.S. 10-year yields falling 35 foundation points closing month for the most important decline because the begin of the pandemic. Yields were remaining at 2.660%, a protracted manner from the June top of 3.498%. The yield curve remains sharply inverted, suggesting bond traders are greater pessimistic at the economic system than their fairness brethren. U.S. The reversal in yields has taken a few heat out of the dollar, which lost floor for a second week remaining week to face at 105.650 on a basket of currencies, in comparison to its recent top of 109.290. The biggest decline came against the yen, in which speculators were vastly short and discovered themselves squeezed out by using the sudden turnaround. The dollar turned into down 0.6% at 132 yen and 43 sen, having shed a sharp 2.1% remaining week. The dollar fared better on the euro, which has a European energy disaster to cope with, and made hardly ever any headway remaining week. The euro become closing at $1.0236, and eyeing stiff resistance round $1.0278. Jonas Golterman, a senior markets economist at Capital Economics, become at a loss for words through the marketplace's dovish analyzing of last week's 75 basis point Fed hike. Our feel is that the risk-on response to the Fed is basically right down to an aggregate of wishful wondering and stretched positioning, he argued. In our view, there was little in Chair Powell's remarks to suggest policymakers will abandon aggressive price hikes even as inflation remains up to now above goal, he introduced. If we are right that markets have misinterpreted the Fed's purpose, the dollar will probably resume its rally earlier than too lengthy. For now, the drop inside the greenback and yields has been a relief for gold that's up at $1,763 an oz after bouncing 2.2% remaining week. GOL. Oil expenses drifted back as the marketplace waited to peer if this week's meeting of OPEC Plus produced in growth in deliver, although only minor. OR, U.S. crude eased $1.15 to $1.97.47 in line with barrel, whilst Brent lost 91 cents to $103.06.